Thirdly, we have Mr. Ivan Masona of Stewart Bank, head of cards and merchant services. Ivan spent some time at Barclays and now he's at Stewart Bank. So he's in the thick of things at the coal face. He deals with the regulators, he deals with the banks, customers, cards. You know who if you want to complain, you know who to complain to. There he is. Thanks, gents, for being here. I think we'll delve into it from the start. So my first question would be let me start with Ivan and then Andrew and then Kuda. For the audience, I think what we'll do is we'll let the panel speak, and then if you have questions, you can put them in the chat towards the end, and then they'll answer your questions. So Ivan, let me start with you. So Zimbabweans have a very love-hate relationship with banks, and we've had this for a while. And then we had the cash crisis of 2016, and the cash there was a shortage. So a lot of the population had to move from what we're used to of using cash to formal channels. So what do you think this has done for the banking industry in the country? Because it shook everything. People were used to using cash, and that was our prime source of trading, had to move to other forms of trading. What are your thoughts on that?
Okay, thanks, Simba, and good evening to everyone who is with us tonight. From your question, I do believe it was a bittersweet period for most of us, as they had to make a bad relationship work, as the ability to carry out financial transactions now is actually a necessity to everyone. Previously, we just walk up into a branch and you get your cash, or you would walk up to an ATM, insert your card and get your cash. But the challenges got so bad that it was now normal routine for the average Zimbabwean to wake up very early in the morning just to spend hours in the queue of a bank to get cash for, normal things like your bus fare. And due to challenges like that, you spending so much time for something which doesn't really add value, I do believe that led to the rapid adoption of formal banking channels and digital banking channels, as people were actually left with no choice but to move to the formal digital channels. And the biggest impact it had on the Zimbabwean banking industry, I do believe one of them was, digital transformation of the sector. It enabled the banking industry to quickly move and get up to breast with the technologies that were happening all across the globe. You find we then got, EMV cards coming through, QR payments, contactless payments, mobile banking and internet banking. Every bank was now shifting its focus towards providing digital channels, which not only increase the convenience of customers to accessing financial services, but also reduce the cost to serve of banks within the market. So one key trend that we also saw was a lot of banks started reducing their physical footprint, closing banks as more are now migrating transactions to digital platforms. More so over and above that, it saw the increase in financial inclusion. For you to have access to a bank account, you had to fill in forms and go to a bank. You have to be approved and get an account. But now we have the bulk of the majority of Zimbabweans have access to banking services. We've got a 94% mobile penetration rate, and anyone can now open a bank account using USSD platform with various banks across the industry. So I do believe, probably those are two of the key trends which we then saw coming into the banking industry as a result of the cash challenges that we're facing.
Okay. Andrew, do you want to add same question to you?
Yeah, I think Irvin is definitely the best person to answer that question, right? Because, like you said, he's in the thick of things. In terms of, I remember 2016, and where I was, that's when, I hope we can keep this session light, by the way, right?
Oh no,
It's
keep
not
it
like
light.
official.
Yeah.
But 2016 is when I was like, oh my gosh, things are really getting hectic. I need to start making plans to book out. So I think 2016, maybe even before that, right? 2008, the wiping of bank accounts and so forth, people that's when the sort of relationship with the banking changed a lot, right? So banks closing down, banks coming and going, so people then resorted to keeping cash under the mattresses, right? I think what happened in 2016, and this is my personal opinion from a consumer perspective, as opposed to a banker's perspective, like Irvin has just given us now, is that my interest of having a bank account was to make sure that I could get that RTGS balance. You know what I mean? It's like everyone just needed the bank account so that I can then, get the US dollar, some form of transaction. If I want to make an international payment, or, certain things, if you wanted to make an online payment, I forgot the platform, Pay Now, I think you needed to have some kind of card, right? So if anything, I feel, I feel EcoCash probably grew a whole lot more and faster at that time, or mobile payment platforms, right?
We'll get to EcoCash. Wait, we'll get there.
I'm just saying, that I feel like more than the actual banking sector, I think the mobile money payments could have benefited a whole lot more during that time, because the problem at the time was, how do I get an RTGS balance so that I can get access to US dollars? It's either I do it by getting a bank account or getting a mobile money account, so if there's any growth from a consumer perspective, and the motivation for me at least was to do it that way. But I think Irvin has just done justice to the sort of formal side of things and how they worked.
Okay. Kuda, do you have anything to add on that?
I think basically these two guys have actually explained most of what is relevant to this, but maybe back to a consumer perspective, really, the period brought about maybe a decrease in confidence by the consumer, really, and you're talking about how things change in terms of our policies, whichever we had, just of course, maybe the past decade, you look at the number of regimes we've had, and probably we moved to a USD era, we moved out to an RTGS, to ZWDL, you name it, right? So maybe in that perspective, the bank might have benefited in terms of that those that had no option moved in to using, soft cash to some extent. But in terms of confidence, you'd find out that that was a turning point for most, whereby you would find out that there was a decrease in confidence because of more or less what we need as a country might just be maybe monetary sanity and whatsoever. But you might find out that we are seeing a bit of that now, where recently I think they are trying to bring in incentives for individuals to save, which maybe some others might argue not really material in terms of the interest rates that they brought recently. I think
we're gonna get to 2021. Let's stay in 2016, 2017.
Okay.
But let me ask. So we've spoken about the shortage of cash. Then we have EcoCash and the advent of mobile money. EcoCash was there before in the market, before there was the shortage. It was just the right place, the right time. Like how Zoom was at the right place, the right time when COVID hit and exploded. Same with EcoCash. So EcoCash became the de facto way to transact for people who didn't have bank accounts because of multiple reasons. Unemployed, they didn't want to save. They wanted rather to save in the National Mattress Bank, which is the other bank that we have in Zimbabwe that is profitable, So now EcoCash has become the incumbent. So my question is, so how do you think fintechs can start to gain ground on EcoCash? I'll start with you, Kuda.
Okay. No, thank you for the question. Well, I'm actually happy that a particular innovation came through at the opportune time. From that to then, or maybe the rest of the fintechs could actually catch up with EcoCash. Maybe it has to do with an increase in efficiency. Uh, Try to do with the market penetration in the informal sector, because you look at how probably EcoCash came to be the giant is that it addressed most of the problems in the informal sector. How it was to open a bank account then, right, and how it was to open an EcoCash account, two different aspects, whereby you'd find out that EcoCash meant it a little bit easier, and even how they operated in terms of the reach, you would more or less feel as if they would address most of the needs that you would require, and their marketing strategies and how they would actually spread themselves across the country was even more or less better to maybe the competitors you might actually look at. So I think how they might catch up is more or less to work on innovation, market penetration, especially in the informal sector, and really work on increasing efficiency. Um,
So
that might actually be.
so you are saying reduction of friction for customers. I think that's what you're saying. Whereas, because I remember EcoCash went from just give your ID and you sign up versus the bank where it was your ID, proof of residence, and $20, which was a bit crazy.
Yeah, true. You might even look at paperwork that was required, really.
Yeah.
Then when I'm sure, but now, of course, we are seeing a bit of an adoption to that form or that mode of account opening. But then would require that you would basically do it with a little hassle, unlike the alternatives then.
Okay. Andrew?
Yeah, I think that's a very interesting question, right? So EcoCash has become a mammoth, obviously because they're backed by big money, right? Rich sugar daddy vibes, you know.
Yeah.
So yeah, I did say I'm a bit candid. So I hope that's okay for everyone who's on the call. So I think it's inevitable, you know, for EcoCash to have grown the way they did. They also had a lot of time. You know, these guys started off 2011-ish. And fun fact, you know, my wife is the EcoCash model, you know, so on the billboards and so forth. Yeah, so it started 2011, but Econet has an interesting way of rolling out their products, right? So they always roll out. They're very agile, if I can use that term. You know, so the products are not always 100%. Things are not working properly, and because they're the only guys, they then get to fix themselves as they go. You know, so there's an opportunity, I think, for fintechs. And I'll put that in quotation marks, right? The opportunity, because first and foremost, these guys have 90% plus of the market, right? So they've been maybe left to it. In terms of disruptive innovation, right? There's two key elements, right? You'll know that there's first mover advantage, and then you've got a first scaler advantage. So EcoCash has had the opportunity to do these things very well. I mean, they've had 10 years at it without anyone really knocking at the door. I know these guys, Telecel and One Wallet, Net1 have tried the best, you know. But that's been the challenge. However, having said that, I think there's a massive opportunity in playing into certain spaces, and I want to speak to like a model that we designed for something that we call digital market making. Right, if you want to create a market within digital, how do you go about it? Right, so the first thing that to look at is to always find something niche, right? So EcoCash is probably very mass market. They're playing in everything. We know that they're doing everything, right? So it's to find that particular niche. You know, there's a paper that we wrote recently around SME banking. How do you do great payments in SME, right? That's a niche that maybe EcoCash or is not really playing in, right? And so there's a lot within that, right? So you have to establish a niche. Secondly, you have to be very customer centric. So we know how many complaints people have, right, regarding EcoCash and Sugar Daddy as well, right? For the longest time, I would always get messages, hi, 0772381561. How are you doing? Happy birthday, you know? So there's a lack of personalization there, right? I feel like I'm a number to this company, right? So the big thing now in finance and fintech is hyper personalization. People want to know that you understand their needs and sort of like the customer journey, and I feel like, you know, maybe Eco Cash, it does not have that kind of pressure because, you know, we're the only ones. So why do we have to then have phenomenal service? Why do great when good is profitable, right?
Okay.
So that becomes a challenge. So for fintech, there's an opportunity right there, massive customer centricity and personalization. A third thing would be great skills and great into digital channels. You could be very reliant on an agent. And the fourth element is around people and partnership, right? So what kind of partners do you have in place? Sometimes to tackle a giant, you have to partner with certain people, and partnership is becoming a thing. Especially in South Africa. I'm actually currently on a project where banks are proactively looking to work with fintechs in this space, right? So you've got small companies, you partner with a big bank or a big financial institution, and then that allows you to then have scale and deliver your niche much more, at a bigger scale, right? Which allows for you to make an impact. So, and then the last thing is around operating model and how you organize yourself internally, which is another conversation, right? But there is an opportunity, not really to disrupt EcoCash because I feel like they're far gone, but there's an opportunity to carve a niche within the Zim market, right? Because there's so many categories of fintech. I can count at least 10, and maybe I'll write them down in that. And a number of those are not touched at all, even by EcoCash, right? So if there's any advice, that's probably what I would throw out there for the other fintechs.
Okay.
Yeah.
Ivan, do you want to add anything on that?
Yeah, sure. Obviously, due to my affiliation to the group, it's a sensitive one. But you know what? I wouldn't want us to necessarily focus on, EcoCash and catching up with EcoCash. But I do believe the fundamental aspect, potential fintechs should be looking at is the lessons from EcoCash itself and how they can then get into the market and develop their products. Without taking anything away from cash. Obviously, a lot has been said. It still remains up until today one of the most brilliant and successful business models deployed in this country from a fintech perspective, because it was relevant. It is still relevant, and it is still very convenient. No other bank or fintech has more than 7 million active subscribers. So it just talks to how it's been successful over the last couple of years. They identified a niche, rightfully, like what Andrew highlighted, P2P transactions through an expansive agent banking model, something banks were not moving into, and they quickly moved into it. And like what Kuda highlighted, the barriers to entry were very low. You didn't need a whole lot of paperwork to get an account, just your ID and you could be transacting. So it was a brilliant model, and it is still a brilliant model. And it is a very scalable platform. That's where you've seen them being able to deploy a number of products. So those are some of the key lessons I do believe, fintechs should be looking into. And in as much as of late, there's been a convergence due to likeness of services with other banking institutions and regulation as well. There's still opportunity not only for EcoCash to grow, but for other players to come in and integrate with EcoCash as fintechs per se. And look, just looking at that, it just tells you that there's a whole lot of a bigger market out there, not only focusing on the business that EcoCash has, but there's a whole lot of other fintechs or fintech variants one can get into. Look at the billion-dollar remittance industry. Look at the microfinancial institutions. We've got more than 150 of them. There's a whole lot of things you can do in fintech. I'll give you an example, and most of the Zimbabweans will be very much akin to this. Up until today, when you get into a hospital, you still have to fill in an application form, be it it's a woman who's pregnant, be it you've been involved in an accident or something, but you can create a fintech which is integrated to a medical aid society just by using my fingerprint to get my biometrics. You can get my personal details. You can get my whole medical record. You know what allergies I have, etc. You know if I'm subscribed to my medical aid, and my admission is far much quicker, and there's far much lower risk of me getting the wrong medication because we're now using tech. And because we're now harnessing technology to be able to access these services or give these services to the general populace, it then becomes an opportunity for fintechs to explore. So I do believe there's still a whole lot of an industry to follow out. There's so many niches to pursue. It's not just necessarily about focusing on the EcoCash business per se. Thank you.
Yeah. So you brought up a very important point. Yeah. I think when we are saying to catch up to EcoCash, it's because we know that it is such a great business. Given what it's done and what it does, it is just EcoCash works. Even though we can complain about their customer service, it does exactly what it says. It sends money from A to B, and it does a few extras. But adding on to that, like you're saying, Ivan, I'm going to come to you. I'll start with you since you brought this up. Fintech is so broad. So why, in your opinion, do we find that everyone focuses on payments and remittances? When I read the report from FSD Africa, about probably close to 40% of the fintechs within Zimbabwe are focused on remittances and sending money and payments. I guess they're easier to monetize, but why do you think that is? I think, in my opinion, I believe if someone could do insurance or something else, that is the section that's untouched. So what do you think is causing everyone to run to these two and avoid the others?
Okay. I do believe, in my opinion, this is basically an issue of following where the money resides. So it depends, and where that is where people are getting their incomes, salaried individuals, be it through remittances, etc., and following where the money is terminating. At the end of the day, you need to pay your bills, you need to pay your rent, buy airtime, pay fees, etc. And you can't do that using cash right now. It's too expensive per se. And you then want to use your RTGS, etc. And that talks to payments. So you then find a lot of fintechs would be targeting that space, be it the margins might be very low, but it is a ready market. And it's now an issue of convenience. Can you offer a better service, a more personalized service than the other party to attract clients and customers to you? If you talk of insurance, you find that is more of something like a luxury within our country, if I am to say. Not everyone has medical aid. Not everyone has funeral insurance. The majority of the cars, if 90% of the cars on our roads are on third-party insurance. So it just tells you the level of affordability of individuals in this market. And if you then try and develop a fintech within insurance, you're pursuing a kind of a blue ocean strategy. You might make money or you might fail. And if you look just across, the market in Zimbabwe, I don't know if it's something we're accustomed to, but people like to follow what the next person is doing. We're having water problems. Everyone is now opening a bore drilling company. We're having electricity challenges. Everyone is opening a solar shop. So that's pretty much why I do believe, everyone then focuses on what's already there. Remittances, it's a billion-dollar industry. There's high fees in that industry. So, you can then come up with your new fintech with better fees, probably better customer service, maybe delivers money to home as opposed to you getting it from whatever establishment, because there is money there and we know there's money there. So I do believe that's why, most fintechs within Zim, led by Zimbabweans actually, then follow, the payments and remittance channels, as opposed to a blue ocean strategy where you're doing something new like in insurance.
Okay. So let me go to Kuda. Since Kuda, you have a fintech and you are doing you're not doing payment or remittances, you're doing trading. So tell us how that came about.
Thank you for that. Just before that, I got interested with Ivan's response there when he highlighted that, when we're looking at maybe our capital base here in Zim and what it allows us to do, you would find out that, of course, you would just be able to do your basics. Like you highlighted on, you find out that most of what our cars on the road have got third party, and then you want to put up a fintech related to that. I really think we don't have the financial muscle to do that, because it's more or less out of the reach of most. And then when you're looking at the numbers of fintech and you want to, gain a bit of traction and money, that it really doesn't make sense as compared to remittances. You know that most individuals have lost confidence in the proper banking sector, such that, the rise of Mukuru, whichever it was, might actually make sense to build other than an insurance fintech company that you might actually come up with. And then also I was just thinking along those lines that you probably want to look at general literacy of, other aspects that you might be looking at. Of course, remittances came through because of the challenges that was more or less emanating in the country. But say if I bring up a fintech that has to do with crypto, yet you'd find out that maybe a significant number of those that are even in the market don't understand the blockchain technology, and you'd want to put that up. I don't think that makes sense. But anyway, coming back to the question, for us, trading was more or less something quite interesting, because you'd find out that at the heart of any economy to progress, you need to find a haven where you'd want to put investments, whether in forms of the capital market. So you look at the money market. I think it's a space that is still, has not been reached by many, and I believe that an increase in, more or less like financial literacy, that we push for that, we might actually find out that it's quite a lucrative market we can all look into, because we can't all base by living on a salary. If that's possible, you'd find out once you lose a job, you're one step away from poverty. So this has more or less come as an awareness of the periods that we've come through as a country and as different individuals, that of course we also need to have those that are more or less passive income that comes in us, that we could work on, and also have something that comes after, even close to our retirement, and other aspects we might look into.
Okay. All right. You guys are open to disagree with each other, remember. So feel comfortable to disagree with each other. Andrew.
Are so good. There's nothing to disagree with, bro.
Okay. So Andrew, I'd say to you, like, you're in South Africa, so you know about the sending of money, right? Since we're talking remittances. And on average, to send money from South Africa to Zimbabwe is about 12%. That's the cost to the consumer. Versus sending money from the UK to Zimbabwe is about an average of 7.6% or 8% rather. So what do you think is contributing to these high costs, given Joburg and Harare is closer than Joburg and Cape Town, but we have this crazy cost of 12% versus 7%? So what do you think we're getting wrong in Zimbabwe?
I think maybe for us actually to a point on the previous question that you asked, right, and why remittances may be quite big as well. In the African space, a lot of governments actually rely on those funds, right? Some of the Western African countries, up to 15 to 20% of their GDP is literally made up of just remittances. So it's a massive industry.
Zimbabwe is $1 billion.
Exactly, right. So as you can imagine, you know, the government will try and make it as easy as possible.
Okay.
Is it me who've lost Andrew?
Oh, I think Andrew went dead. Maybe it's load shedding. Let's hope he comes back. Okay, let's hope he comes back. I guess we can then Andrew.
Yeah.
Okay, we thought it was ESCOM.
No, man. ESCOM is no longer taking notes from ZTTDC.
Oh,
they have stopped copying and pasting stuff.
All right, we had lost you. You can continue.
I don't know where you lost me, but I was saying that the remittance industry is I mean, it's quite key to many governments, right? And there's two reasons why it may be quite expensive to some extent. Firstly, from a South African perspective, it's because South Africa is heavily regulated. Hey? Believe it or not, South Africa actually has one of the best financial systems worldwide.
Yes.
You've got German banks coming to learn from banks in South Africa. That's how interesting it actually is. So the financial system in the country is quite solid. For me to send money to Zim, it is a mission. I have to think twice because they might as well ask for my dog's birth certificate kind of thing, you know. They literally, you know, they'll ask for a letter of just a guarantee letter from the bank that I bank with them. So I need something from the bank that I'll then take to whatever remittance company that is. It's a long process. So just the administration that is within that system starts to drive the costs up, right? Also because it's an agency-driven model, you'll find that there's a lot of players right involved. So you'll have maybe Western Union partnering with a certain bank and Zims. Everyone wants their cut within that space. And that will drive the fees up inevitably, right? And then the last thing would be around how, I don't know how I can probably say it, but it's a very oligopolistic space, right? In that there's very few players. So in that case, people talk to each other, right? They're like, hey, you know, people don't have any other options. We can keep these fees at 10%. There's very little else that they can do. So it happens, right? In that if you know that it's driven by a few players, the prices are then, they tend to go higher. It's just natural economics. It would be very interesting to see what happens as the players sort of increase in the space. I think the fees will inevitably start to plummet.
Okay. Ivan, do you want to add something there?
Yeah, probably I can add a bit. You know, I'm not really familiar with remittance business models or what drives them from a cost perspective. And it's really good we had Andrew on this call because, you know, my thinking was, you know, the study probably involved looking at, you know, how someone can give a bus driver 200 Rand at Joburg station and wait for it at the road port there. So if you look at those fees, if you then incorporate those guys' fees, it then becomes very expensive as opposed to using digital channels, which would then explain why probably remittances from the UK would be cheaper than from SA. But I think Andrew has really shed the light on where the costs come from. You know, there's a really thin line between clean money and dirty money when it comes to remittances. And if you're operating in a highly regulated environment, then obviously it then drives the cost of the service up. In this case, like he highlighted, the regulation is high in SA, and that probably is what then causes the cost to go up due to the number of conditions which have to be satisfied before the money can be sent to Zim. But over and above that, for me, it just shows that there's a clear opportunity that also fintechs can look into further interrupting as an industry. If you're looking at 12% from SA and 7.5% in the UK, it means it can be done. And if you find a way to do it, then definitely you get a significant amount of the business coming your way. Remember, we've got the largest contingent of Zimbabwe living in the diaspora, staying in South Africa, close to 2 million. And if you can unlock the fees from 12 to 7, best believe everyone is coming to your service. So it actually just sheds light to an opportunity that someone can pick up.
Okay. Kuda, do you want to add on that?
Yeah. This actually has been quite interesting. Thank you for the light, Andrew and Ivan. Yeah, I think I'm also pointing to the fact that, you look at, as Ivan just highlighted right now, that you have told about 2M Zimbabweans in South Africa. You're looking at probably a very high number of those that would want to support us back in the country, and you could actually profit from that. So many people are actually trying to support us back home. They send in money here and there because we can't meet most of the needs that we have here. And when you're a service provider, you find that there is an increase in demand for a particular service. I think naturally economics will tell you that you need to fix your pricing. And then also I was just thinking, during the contributions that you brought up about maybe a comparison between an African country and a European. So I was just thinking, might this not be a factor of maybe how volatile one currency might be in terms of another? Because you're comparing the British pound to the rand. Generally, if you're a service provider and you know that maybe you are in a country with a particular currency that's highly volatile, you might find out that to curb for whatever risk that's associated with that country, you might as well just increase the cost so that you're safeguarded. Unlike when you're more or less in a stable market where you might actually say, okay, it's stable, and you look at maybe the competition that might be there as well. You more or less cannot actually put up quite a high charge in that. Plus, I generally think that, these European services might have maybe competition there might be different from how we operate. I think Andrew highlighted there that, of course, you find out there's just a few firms that will be operating there, and then we can actually come together and say, okay, this is how we're going to do it. Unlike on the other end where you look at there might be so many players and everybody wants to get most of the clients, and you tend to drive down rather than up in a bid to get the most out of what is there in the market.
Okay. Those are all great points. I think I'll let me go to Kuda as well for this next question. One of the biggest hurdles we have in not just in Zimbabwe, but for any fintech is regulation. Banking is one of those industries whereby it's difficult to say sorry and then do things. You have to ask for permission at times. But fintech moves faster than the regulators can. Fintech is like, if you've ever watched, Looney Tunes and the Roadrunner, yeah, they're always trying to catch the guys who are building. So they're always behind. Your regulator is always behind. So how can the regulators then improve how they work with fintechs going forward in Zimbabwe, so that we can build this culture of fintechs coming in, creating exciting and innovative businesses? And what do you think other stakeholders will say about this? Because the banks want to maintain their stronghold on the market. How do you think? Yeah.
Interesting question there, Simba. Well, I think to answer the last question, I don't think any stakeholder will be against efficiency if there is probably a way to do it properly. So yeah, but I do understand where you're coming from. And then maybe in terms of the regulation that's coming in, you're looking at the market that we, or maybe the structures that we have, maybe in Zimbabwe globally, you would find out that because there's so much innovation as a particular maybe government or regulatory institution, you might find yourself that, okay, you would want to maybe allow something you truly understand, and you have maybe a backbone to say, okay, in the event that we're dealing with the rest of the public, maybe the investors' funds or whatever it might actually be, you would want to actually grant access or give access to something that, you know, okay, in the event that this happens, we have a countermeasure that does this and that in particular. Because at the end of the day, if anything that happens to that particular fintech company, it's going to come back to the regulators, not the fintech per se, such that it might seem as if there's something wrong with that. So maybe you'd find out that most of the regulation is far most behind that, because, you know, people are being more innovative each and every particular day as they see different problems that are associated with the market and come up with interesting ways to solve the problems. But then you'd find out that, okay, this comes up, like we were working on a particular system, and then they would actually have to try to put a regulation on how best we are solving people's problems, which might actually be quite interesting if you really think it that way. But so it might be a bit of a challenge, because later on they would only find out a fintech after it has been formed and try to regulate it after. But maybe we're looking at what we could try to is just work on the efficiency and adoption of global trends that are coming in, and how best they could actually adopt to make environments favorable. Because I'm pretty sure it brings efficiency. And
let me just give you some. Let me give you some pushback there. Why I said stakeholders may not be. They may be against this is because when EcoCash started gaining traction, there was a push by some in the banking sector. They didn't want it on ZimSwitch because they understood that by allowing it to join the ZimSwitch platform, it meant that these customers that they couldn't get to were now able to transact and didn't need the banks. So I feel the fintech that may come in and provide a certain, let's say, affordable form of insurance or medical aid will then push out these banks, because these banks are slow. Banks are slow by their nature and their size. That's why they're big. They just slow. A startup is your sports car. A bank is your, I don't even know what it is. It's a tractor, maybe. It's a what?
He's happy with that comment there. It's like,
sorry, we've got a banking guy. Yeah, I guess Ivan, you can.
I'm seeing the numbers dropping, bro. People are like leaving, you know.
Ivan, you can. Yeah. So tell me, how do you deal with the regulator then? What do you think they can improve for you guys, without giving us secrets?
Yeah, probably firstly I have to comment on which stakeholders would be against this. And obviously the only stakeholder which would be against fintechs coming through is someone who's benefiting from the status quo.
Yes.
Be it due to barriers of entry or other things. But as we now live in a digital era where information is ubiquitous and can be found anywhere and everywhere, it then becomes important for a lot of institutions to collaborate in order to provide financial transactions and to aid financial inclusion. Love it or not, banks have to coexist with mobile money wallets, with marketplace lenders, with e-commerce platforms. We all need each other. So I don't believe if one can survive without the other, because the market is so huge and there are various niches which also have to be attended to and addressed. You will find, money is a sensitive issue, and that then becomes the importance of regulation. We've seen a number of startups or fintechs coming through in Zim. You've got your triple M's, if you're aware, and others. They fleeced people of their hard-earned money. And remember, we're a very low-income country. The majority of people are actually in poverty. And if you let people like that, who are smart, who understand how money works, who know people can quickly fall for get-rich-quick schemes, then there would be a lot of trouble within the market. So regulation, of course, is very important. And the RBZ took a very bold step and a very good step last year when they introduced the regulatory sandbox,
Yes.
with guidelines, of course, which allows upcoming fintechs to come through, engage the regulator. They can experiment with their products, be it they're in lending, crowd financing, smart contracts, a whole lot of that other smart jazz happening outside of Zim, which we don't have, which a lot of people have been crying for. And the regulator has said, come through and we'll assist you in a safe, controlled environment where we won't make mistakes with people's money. And when you come out of that, we know that you are a good product for the market. So they did take a very good step in the right direction with that. But outside of that, I still do believe there's still a lot to be done. Especially with the turnaround time of then getting fintechs up and running on the ground. There's still there's no clarity with regards to the process, how long the approval takes, what each stage takes, where your application will be at the regulator. And with digital platforms being there, I do believe they can now adopt the same, where one can then know where you can log in onto a portal. If it's an RBZ portal, you know where your application is. If there's something to submit, you receive a notification, you quickly work on it, you submit online, and your application can move quickly. So they're slowly getting there, but I still believe there's still a lot to be done, but they're doing some good work there. Thank you.
Andrew?
Yeah. So I mean, I've had the privilege of working with some clients across the continent, right, and particularly in Nigeria. Nigeria has one of the biggest fintech associations, right? And what they do with that critical mass is they approach regulators in one go. So we know, right, there was an issue with blockchain in Nigeria and so forth, and I think what you're doing, for instance, what Tech Hub is doing is quite important. It's important for the ecosystem to come together, and you approach the regulator as a whole, as opposed to sort of small trinkets going to the regulator. What that does is you begin to highlight the size of the market, right? You're showing this is actually how big this is. As opposed to one small fintech going there and saying, hey, we actually have maybe 1,000 users and would like to do this. To the RBZ, that would sound like, it's not much priority. But if a whole industry starts to come together and represents a critical mass of 1 million plus users, it actually begins to make sense for a regulator. So what Nigeria is beginning to do is they're beginning to create a massive ecosystem. And I mean, it's got a whole lot more benefits when you do it that way.
Yeah.
So, I don't know what type of people are on the call, and I would actually advise for some form of organization just around, I don't know if there's a fintech association of Zim, just to create that kind of body, which can then approach a regulator en masse. It actually makes a massive difference. And in most of these instances, so South Africa is very good with some of this governments form departments that I think there's like an intergovernmental fintech department that just comes together. It'll be SARS, Treasury, the SARB, so it's almost like ZIMRA and RBZ and Treasury coming together to actually start to work on some of these things, and they have to be done proactively. So the fintech mustn't wait, right, to get closed down, but they should actually approach and say, this is what we're working on. And there's actually massive critical mass because we are representing collectively 1 million users, and we feel like, we would like some form of regulation, but would like to hold your hand in the process because, like you said, maybe we are more, the fintechs are more innovative than the actual, regulators. So I think that would be what Ivan and Kuda have shared.
Okay, let me ask Kuda, how easy is it to hook up successful fintechs as a new fintech trying to create value? How easy is it to hook up? Yeah, okay. So Kuda, how easy is it to align yourself with a new fintech, with a successful fintech as a new fintech? Do you get access to things like APIs and so forth?
Okay, thank you. I think as highlighted earlier on in the discussion, the regulation and whatever is around, after facing so much regulation as a fintech, you've finally established whatever you're doing. You would find out that when one comes as if they're trying to take a shortcut, you might find yourself putting more or less in the same position whereby you know what's needed, and because of the nature of what's around fintech, you're also dealing with people's monies and things that are quite sensitive to them. You more or less want to be careful around that, and so are those that you would also want to partner up with. They would actually try to check if you're really authentic and you have the say financial muscle per se to take exactly what you want to take up, and if you're up for it, you would they would actually put some measures to find out, okay, is this quite authentic? Can we work with someone like this, and for how long? How sustainable is whatever they're trying to put up with us? Because at the end of the day, you wouldn't want some hit and run situation in a particular environment, which more or less we all know is quite sensitive to all of us. So it's not as easy as it sounds, as if maybe any other startup might say, okay, I'm now getting into farming, let me just get land and look for seed somewhere and start doing it. It's a whole lot different, and most of the work for starting up a fintech really is the groundwork, where you're trying to look for whom to partner and convince them to say, okay, this is actually something that makes sense and we're willing to go far. Yeah.
Okay. Let me just open to the audience. Are there any questions?
So Simba, if I can just jump into that question, I think it's
okay.
Very.
Yeah, I just want people to get their questions ready and then come in after you. Go, Andrew.
They can go ahead and just post them in the chat or ask as well. I'll put my email address, by the way, on the chat as well if people
okay.
have access. I would like to encourage, right, if there's people are running fintechs, try and look outside Zim, right? First, build a product that works, get the traction, and then look outside Zim. And the reason why I'm saying so, I mean, this is out of my purview. I think I shared a report with you, Simba, at some point,
Yeah.
I moderated a session with one of the vice presidents at Monday.com, and he says that Israel is such a small market, so Monday is based in Israel. Israel is such a small market, but they build, everyone who's in the country builds for the rest of the world. It is literally a philosophy. If you look at the NASDAQ, I think that over 30% of the companies on the NASDAQ are actually Israeli companies. So these guys have actually made it a philosophy. Israel is called the startup nation and so forth. they've made it a philosophy to build for everyone else. You would not believe the amount of partnerships that South African financial institutions are looking for in terms of fintech. So in some instances, I have conversations with people who are looking for, maybe struggling within Zim, trying to make things work. But there's a massive market outside the country. Like I mentioned earlier, I'm actually on a project where we're literally looking for fintech partners for a financial institution. And there's at least 5-6 big institutions of that nature with a massive customer base who are looking to those kind of things. So just something I'd like to just throw in there is, as we build, let's try and also think outside Zim, and not really, bogged down to that environment. There could be a massive opportunity in that.
Yeah, one of the things I like to say is collaboration is the new competition, because if you're competing, you're just gonna fight for 1%, 30, 70%, 50%, but it's better to collaborate and share resources. Ivan, do you want to add something?
Yeah, maybe just a small addition. I would want to differ with Andrew a bit.
Oh, okay.
I believe there's a lot of opportunity within Zim, and it's all just about how a fintech would apply itself. I would agree with him by looking outside in terms of, also seeing what's happening globally, who are the leaders within certain fintech sectors, how to learn best practice. But you'd find that there could be also opportunity to then take those technologies, bring them to Zimbabwe, and it would be a success. Look at EcoCash as an example, a good example we're talking about today. If you look, M-Pesa was there before EcoCash, and probably it's quite a similar model. But at the end of the day, it was a relevant model because someone looked outside, got to understand what model worked in a similar environment, then, pushed it onto the local market and made, significant amount of money. So, it's good to think global, but you also have to appreciate not everyone has the access, to global markets or the ability to move to other countries where they can then try and push their products. And obviously through engagements with you guys like, Tech Hub or Andrew in SA, you might find an opportunity to then move across and showcase your products. But I still do believe, there's one statement which says, think global and act local. When you're local, you understand the politics, the dynamics of the market. But if you think global, you're now bringing something which is different to the market, and you can then get that market share, or be it a brilliant product, which then grows far much better than what you'd ever expect. And you then actually get other companies abroad coming in to see, what are you doing in Zim that they're not doing elsewhere, and taking it outside.
Okay. All right. I've got a question from Nipson. So I think, Nipson, can you unmute your mic, because I'm not sure if I'm asking this correctly. He's asking how well is blockchain developed in Zim. I think you want to go a bit deeper for us there. Nipson?
Hello, good evening.
Evening, Nipson. Hi. You can ask your question.
Basically, I wanted to find out how well developed is blockchain technology. Say, developed or deployed, say, in Zimbabwe. I mean, do we have the right skill set, say, for that type of technology in the country?
Okay. Guys, who wants to take that?
Yeah, so I don't have the knowledge there. I'll probably pass that one.
I could take that.
Okay.
Yeah, so, the application of blockchain technology is very broad. and it would have been good if we had some kind of specific example. But when we talk to skills like he's referenced, it's really hard to tell. But we do have a lot of brilliant people that are coming out of some of the local institutions, like HIT, very aware of what the blockchain is, very able to program and develop various products within the blockchain. But you also find, maybe because of the situation within the country, the majority of these individuals, once they get to a certain level of qualification, they're leaving the country. So it's then hard to track them down as being within Zim, because they eventually have left due to their level of qualifications and their understanding of the blockchain. So obviously locally, we wouldn't say there is much, from my understanding, around blockchain. If you read the news, if you look at other institutions or fintechs out there, very few, if there are any, are actually using that technology, and it is still something very new to the market as well.
Okay, let me give my 2 cents on the blockchain. The blockchain, from what I know, the blockchain is what we currently have now. Banks transmit on whatever your network is called, Ivan, the telephone network or whatever, which is much faster. Blockchain is much slower, right? But it's more secure because it's encrypted at either end, so you can't hack it. So this technology, whilst we can probably use it in Zim, it's a bit slow. It's more secure, but it's slow. And then what I will say is, I know there's one startup which is trying to advocate for it has tokenized goats, and goats become an asset, and you trade these goats, actual goats, on the blockchain, right? They won a prize for 3,000 euro in Europe for this idea. So there are people who are trying to do this. And then this goes back to what Ivan is saying. There's not enough practitioners who are working on the blockchain. You'll find 1 or 2 guys who come out of university and have an interest. But because we don't have that uptake in it yet, it has not yet grown. And I mean, even if you look at other markets, blockchain is mainly just being used for your Bitcoins, your ETC, and it's still a very nascent market, which people are not sure of. So I think we're still developing that, and then we'll see as time goes. But it's just not as quick. It's not as fast as your traditional telephone network at the moment. Can't push as much data as the telephone network, even though it's more secure. Which is the other question? Who else has a question? Okay, this is okay from Ayodele. We're waiting to hear from you. He's saying, is the fintech industry being held back by their need to hire locally instead of exploiting the global workforce? Local developers don't seem to be as innovative. What to the panel? I'll say, Kuda, what do you think? Since you have a local fintech, what's your take?
Okay, can you take that again, Simba? Can you take the question again?
Is the fintech industry being held back by their need to hire locally instead of exploiting the global workforce? Local developers don't seem to be as innovative. That's what he believes, that local developers don't seem to be as innovative. So our hiring policy is holding us back.
Okay. No, that's quite an interesting question there. I'm just going to answer this on the perspective of how we actually came up with Onum Capital, and also in terms of innovation and how good developers are. You'd find out that maybe my experience with these particular developers that you've worked with, a developer is like a builder. You tell them what you know, and they build exactly like you tell them. So you might find out you'd want to move away from the perspective where you say the developer or the skill set that we have in that particular innovation are the lag, but our creativity, because of the exposure that we have, is quite limited. Why I'm saying that, you look at maybe the capital market. so far we have two, more or less I should just call them online trading companies for stocks in Zimbabwe, right? Just two. If you look at other markets, you barely find each and every bank can actually trade online in terms of your stocks, your equities, your securities. They can do that, right? So with that lack of particular exposure, you would find out that yes, you might find people who could do literally anything as you tell them in terms of development. But now, creativity, how that maybe responds to a particular field you're looking into, and how well you could put that onto a particular system online and make it work. That might actually be something that we need to work on, just get a little bit of exposure. Of course, we do know that maybe our market is still developing in so many aspects and things. But I'm sure eventually you should get there. It's just that you might not as compared to the rest of the other economies that are at later stages than where we are at. I think we have what it takes. Just we're still gaining traction in terms of where we really want to go. I mean, think of how fintech was like probably in Zimbabwe 10 to 15 years ago, more or less a myth, where others were actually at later stages or development stages, just as more as, you know, others have adopted blockchain and whatever it is. But to us, we, you know, even basic knowledge to someone in that industry, you might find them you know, having a bit of a difficulty in trying to explain really how that works and how best they can utilize that and whatever they're doing. So yeah, I think those are my views as that.
I think
I can jump in quickly.
Okay, can jump in and then ask the last question.
Cool. Like one of the best developers I know is from Zim. You know, I think there's massive talent in Zim, and maybe I can go back to one of the things that I mentioned earlier around trying to organize, you know, as an ecosystem. What if we're to learn? I remember Ivan spoke about best practice, right? If we're to get best practice from the Silicon Valleys or what's now called Silicon Cape, right? Is the developer community is very closely knit, right? So you know, there are platforms where you go to in the States, and it could be online platforms where you can then access a particular skill or talent, right? So the challenge with not having a well-defined ecosystem is that the fragmentation does not allow for easy identification of what you're looking for. So people are out there in their small pockets doing great things. But in some instances, you know, like we mentioned, sometimes in Zim, some of the best minds will then say, you know what, I'd rather just get a great job at such and such a company. And I know one of the companies that has one of the best tech people is a company like ZimSwitch. You know, that's actually my best fintech in the world, guys, by the way, just to throw you know, people will the dream will be, if I can work for Econet, if I can work for ZimSwitch, that's it, I'm okay. And sometimes, you know, we know dreams die in that kind of environment. I do believe that the talent is there. It's just an issue of if there's a way to pull it all together and have it quite accessible, then it could be quite easier to then, you know, identify the kind of talent for some of the things that we want.
Okay. Ivan, do you want to say something, or should I ask the last question?
I just support what, you know, the guys have said. We've got brilliant developers in Zim, massive talent, but obviously being able to retain or attract skills also talks to, you know, the size of the market and what kind of package you can give someone. We've got brilliant developers in Zim who've left and are working for your Google, your Apple, your Disney, brilliant developers. But it's all about, can you afford to keep those developers on board? And it's really something we also need to work on, not only as companies, but probably, you know, even nationally, if they can find a way, you know, to keep these guys in Zim, because the things they're doing out there are brilliant, phenomenal things. And if they were to do them in our country, I do believe a lot of fintechs would come up doing brilliant things. but it all boils down to, at the end of the day, what's coming to one's pocket. And without that ability to then retain skills, you always find, brilliant developers are coming up, but they're always leaving the country. Similar to where we are with the majority of working Zimbabweans, the former working Zimbabweans are not working in Zimbabwe. Yeah.
Okay. So this is I think probably make this the last question because I know you guys have to go. So Valentine is saying, earlier we spoke about integrating with EcoCash, and people that he's spoken to are saying it is difficult as a fintech. It's not the easiest thing to get the EcoCash API. And if you do, you have to do some coding or hire a developer. Wouldn't the emergence of a competent competitor to EcoCash be better for the ecosystem if we can make it easier within reason to access the service? So basically he's saying, how can we open it up better? Who can come in and challenge EcoCash? What do you guys think? Do you think we should have a competitor that can compete with EcoCash and make it a level playing field?
I think a short answer, if I quickly jump into that. So I think the question is two-pronged, right?
Yeah.
There's an element that says we want to integrate with EcoCash, and the reason you want to do that is to tap into the size of the base, right? If there's a competitor, and the competitors I think are there. I mean, I haven't had a look most recently. The challenge is they don't have a very strong foothold in the market. So it would be great if there would be a competitor that has the size of EcoCash, but the challenge is everyone wants to plug into that golden API because that's where everyone, like what Ivan said, that's where the money resides, right? So you want to ideally you want to plug into that, and yeah. At some point, we also tried, and it just did not work out. So it's I don't have a formula.
I'll just add. I think it's difficult because EcoCash is. I don't want to attack them, but they are a mobile network and a bank, so they already have the distribution is the problem, and they have that in truckloads. So it's very difficult to serve them. It's like trying to say you want to change people from drinking Mazoe.
Maybe I can come into.
Yeah, come in, but.
I think Ivan just comes in with that formal, like
the vibe, the regulator vibe.
Actually.
But maybe it's because APIs are still something new to the market, and EcoCash is one of the very few fintechs that also brought some of these innovations, which are now ubiquitous across the market within Zim. But however, I'll tell you, I'm exposed to a number of fintechs. You talk of your MasterCard, your Visa, your Union Pay, and we work closely with those guys. And you don't just get an API like you are asking for the directions to go somewhere. There's process to be followed. There are conditions you have to meet. And if you can't meet those conditions or those processes, then of course you can't get the API, because remember, you're integrating into an ecosystem. And once you're integrating into an ecosystem, as an example, you're a fintech which provides a certain service, bill payments as an example, and you want to integrate into EcoCash so that their customer, you want to tap into their customers so that they can pay bills to whatever business you have. But look at it, 90% of the time your service is down, or you haven't provided us with sufficient confidence that your service is stable. What that then does is you're now impacting the service on the EcoCash platform. At the end of the day, people are exposed to that platform as opposed to your service, and they'll blame the EcoCash platform. So people also have to understand that, when you're asking for an API, you're not the only one, and there's an ecosystem to protect as well. And if you can't meet certain terms and conditions, then obviously there's the reason to decline. That's why it seems like, the holy grail out there if you want to build your business, just because of you have to tap into a massive customer base. But if you're looking at a smaller service which still wants to come up, which wants the relevance in the market, they might be more open to the risks of giving the API to each and everyone, integrating into them because they want to grow. But when you have something which is as big as EcoCash, also understand, the issues of national risk if something were to happen with your integration and cause the service to come down.
Okay. You defended your EcoCash very well, and Valentine wants to come in. Valentine, I think you can ask your question.
Okay.
Good evening, sir. Go ahead.
How are you doing?
Good, thanks.
All right. I think it's Ivan. I think in this age of COVID, with so many businesses going digital, with so many people needing payments integrations, the potential is massive. And I understand that APIs and security run hand in hand. You have to secure your API. You're plugging into a massive ecosystem that could, affect the business of other people. But I'm not saying lower the barrier to entry. I'm saying, make it a little bit more reasonable. We understand what's at stake. But then again, if EcoCash keeps being quote unquote exclusionary, someone is going to come on the market offering something easier, something way more secure. And we've seen businesses like Xerox back in the late 90s go from one of the biggest companies in the world to nothing at all. So I'm just saying, think about it.
Okay. I totally support what Valentine is saying. At times, if you keep, so high barriers of entry, people find, how to build a Trojan horse and get inside and destroy whatever you set up. I'm not saying I'm representing them. Remember, I'm just speaking in my own personal opinion on views that we're speaking about as a panel. And I do believe it's something they should also consider if it's them to develop a sandbox which they can manage in some kind of environment. I do believe it's something to look at. I was just commenting from the perspective where how hard it is to get APIs for certain institutions. I work with MasterCard, I work with Visa, I work with UPI, and they're not as easy as just dropping an email. Can I get your API because I'm offering 1, 2, 3 service? Yeah.
Okay. And I think on that,
devil's advocate thing as well there, Simba. I think I feel like sometimes EcoCash wants to use the size. I feel like they want to build everything themselves, right? If you, I'm sure they've got a massive roadmap of features and things that they want to do. So I just feel like they're like, why should we add you? We can all do it ourselves, So that's another challenge that I feel is sometimes prevalent in that situation. But yeah, that's my 2 cents on that.
Yeah. I think why we have these discussions as well. A good example of a fintech that got involved and came from nowhere is if you look at South Africa, Capitec. Capitec was banking the unbanked in South Africa. And the other big four looked at it like, whatever. And they paid it no mind. Fast forward 10, 15 years later, Capitec is a massive bank. And the people who the bank said have money, some of them have Capitec accounts, which they use for most of their daily transactions because it's much cheaper, and maybe an F&B. So Capitec basically came from nowhere. So I think if the panel, if you have anything that you want to leave, any parting notes, I think this is the time. Otherwise, we'll wrap it up. Guys, if you have anything else you want to say.
Yeah, I mean, if I go ahead, it'll just be to encourage everyone who's on the call to build. It's I like what I mentioned earlier. So there's massive opportunity, right? The fundamental of startups in general is to answer a problem that is a common pain point, right? When we look at Zim by we, I mean, as people in general, even within Zim, we look at Zim as a country with a number of problems. And I feel wherever there's a problem, there's an opportunity to do something. Yeah, so I think let's challenge ourselves to build. And the one thing that I said as well, just in the call, just to organize as an ecosystem, just to make it bigger. You know, Nigeria is taking off now because their ecosystem is beginning to coalesce, and you're seeing a lot more exits. Now you're seeing a massive investment getting into Nigeria, right? And that's because of the ecosystem. Pretty much, people are doing so great. More things are being built. The more things are built, the more exits you start to get. The more exits you get, the more investment comes in, and sometimes that's the reason why the money doesn't come. So it's a virtuous cycle. And I just would like to encourage, just, you know, you have that idea, go for it, build it. You have no idea how it can then literally be the next big thing. And there's so many places where you can get support. You know, Tech Hub is running an accelerator. There's a lot of accelerators that even I have access to. I'm actually sitting in an accelerator right now, by the way. You know, so people are looking for startups. Sometimes you look at it from where you are and feel like there's nothing happening, there's no funding. There is a lot of money moving around. You just need to be able to build something really good and something that's quite different from what's there.
Thank you.
I agree, Andrew. I agree. As someone who's also working on a startup, really, there's so much opportunity. I think most of us do not really just want to try it out and take the risk and, you know, find out how best you can sit yourself in the market. But I think once you get in there, be consistent, you'd find out that you look out at whatever you'd want to do. There's so much potential. There's so many things that you can possibly do with the amount of, you know, inconsistencies that lie in what's already there. You can actually build out something that, you know, makes sense. I mean, if we look back in the conversation of how these remittances came out quite in Zimbabwe, look at a decade ago, it wasn't really. And now it's more or less the talk. You transact more using these platforms than any other. So because of our environment, it's more or less the perfect to bring up fintechs and make it come out quite well. Of course, maybe some might talk about funding and whatever it is, but more or less when you push your idea quite well, you be consistent, you would find out that eventually you should actually get there. So I think this has actually been fruitful discussion, and yeah, I think I also encourage those that have similar ideas to come through, and you know, you would find, you know, you're leaning somewhere in the market, and I'm sure it will be betterment for the rest of the economy. The more innovation we have, the better standards of living we might actually end up in this country.
Okay, thank you, Kuda. Ivan, do you want to say something?
Yeah, definitely. Just to definitely add on to what two gentlemen have indicated, it's good Kuda is already part of an upcoming fintech. And, you know, we've been using a lot of examples of EcoCash. And it would not be fitting to close with us speaking about our chairman, who's Dr. Masiwa. Him being one of the very few billionaires in Africa, and the only probably billionaire in Zimbabwe, is for a reason. And one thing he built is resilience. And, you know, startups and fintechs should build resilience. He's managed to build a lot of businesses to a point where, you know, Econet and Cassava are one of the top companies on the Zimbabwe Stock Exchange. But similarly, they have also launched a number of companies which have not fared as well as you'd probably have thought. But one thing he built is that resilience, that ability to always be curious, that ability to always try. And, you know, a lot of fintechs or upcoming startups should also pick, you know, similar values from the same, because once you just try some, you can never shoot a shot without trying to take a shot. You can never move from point A to B without taking that first step. Of course, it's a step of courage and a big leap of faith. But there's a big market out there. Look at the other companies that have come up. We didn't have Uber 20 years ago. We didn't have Airbnb 20 years ago. But they're now bigger than some of the companies in their industries. And it just speaks to someone who chose to take a bold a leap of faith and stay true to their values. So I also encourage a lot of people, or even startups or fintechs in the market. We have your OK Zimbabwe, yes, your Pick and Pay. You can develop a startup or fintech that's bigger than them. You've got the Amazon model out there, which is working perfectly. You can find a way of how to bring all of that technology and innovation into Zim and be very successful. So I'm just encouraging the guys to, like what Andrew said, dream, try, you never know where it takes you.
Okay, gents, thank you for that. We appreciate the time, and I think just to tell the audience, I haven't wrapped it up nicely. The reason why we use EcoCash, we've used it as an example, and we don't want to look down on it because it is the gold standard. They know what they're doing, or excuse my French, they know their shit at EcoCash and EcoNet. So that's why they are the gold standard, and they've shown us over these last 5 or 6 years that, hey, we're here and we're not going anywhere anytime soon. So you have to come up with something that's great if you want to play where we play. And I'm sure this is the same for all big players. If you want to play against OK, you can't just come with a haphazard product. You have to bring your muscle. So Andrew, thank you so much. We appreciate this. Kuda, thank you. Ivan, appreciate your insights. Thank you so much, gents. Have a great evening. Let's catch up. If you need the emails or the contacts of any of the gents, you can email me at techhub@brieftechonline.com. Andrew left his details there. Ivan, well, if you go to Stewart Bank, you can ask for him, but he may be in meetings or he's working from home. He'll be launching his startup soon, so he wants you to invest your money in Onam Capital if you're looking to invest in the ZSE. So let's hope you see these guys around and maybe you can ask them more questions. So everyone, good night and thank you for your time and your insights.
Awesome. Thank you, everyone.
Cheers.
Thank you, Simba. Thank you, James.
Yes,
Thank you, everyone.
Yeah, otherwise we'll be here all night because I can see there's more questions coming. And we have to watch ZBC News at 8. So cheers, guys.